Hi everyone, good morning, good afternoon, good evening, wherever you are. I'm your host, Dr. Heather Shah, and on behalf of Calwass, I would like to welcome all of you to this webinar. Thank you very much for joining us. Today we have very interesting topic. I am really honored to welcome and introduce our distinguished guest speaker who is going to talk about what is finance, learn about finance, what are the new trends and approaches. Most of the time we ask these kind of questions from ourselves, so you will get the best insights about all these things as we have an expert with us today in this session. So stay tuned because an amazing stuff are coming ahead in this session. So before we start, I would like to thank Calwass for arranging such enlightenment sessions for their support and providing us such a wonderful platform. The aim of Calwass is to give you the opportunity to interact with world renowned speakers, teachers, authors, researchers, experts, professionals, and businessmen to share their views, experiences, and tips which will create an impact and will enable you to learn new things and to develop yourself in order to grow individually as well as to contribute to the world at large. As our slogan is come, learn, and share knowledge. So today we have an amazing person who has a vast and internationally known and recognized speaker. She is a great human being. She is always ready to support and contribute to the world in different ways. So let me introduce her formally. She teaches at IBA University of Sindh as an assistant professor. She did her bachelor's and master's of business administration from IBA, the University of Sindh, and her MPhil is from Ikra University, Karachi, and PhD from University of Malaya, Malaysia, which is a world 59 ranking university and Malaysia's top university in business finance. During her studies at the University of Malaya, she served as the event management director of the Association of Pakistani Students. She has published research papers in national and international research journals. She attended international conferences and presented her research papers in national and international conferences held in Malaysia and Pakistan. She attended various seminars and webinars as panelist and guest speaker on different stages and on different topics related to business, economics, innovation, social culture issues. She is a recognized supervisor for MPhil and PhD candidate by Higher Education Commission Pakistan, external examiner of MPhil and PhD thesis dissertation, also performing the role of evaluator and reviewer, also a member of board of different journals in the process of publication of research articles. Apart from that, she has published various articles on different social, political, economic issues, including the current world situation regarding COVID-19 in the different newspaper and magazine in English, Sindhi, and Urdu languages. Beside columnist, she is also writes poetry as a poet. She has published two books on poetry in Urdu and Sindhi language. She has also completed her studies as a lawyer. Her research work that currently consists of more than 25 research papers on business field can be seen at her different social media account and the research get which is available. So please help me in welcoming the our guest speaker, Dr. NAVEEDA Katper. Welcome to the Calwass platform and thank you very much for joining us, Dr. Saiba.
Thank you very much, Dr. Heather Shah. आपने बहुत ही you gave a detailed introduction of mine, and thank you so much for that great kind of introduction. Uh, I am
Thank you very
thankful to
much
you
once
for
again.
inviting in your program.
Yeah,
Yeah.
thank you very much. And today we are very excited about this topic because finance is very much important. And most of the time, the different students they used to ask why to opt the finance, what are the new trends, and what are the new approaches. So today, even I will be learning a lot from your this wonderful session. So as a reminder to the audience, let me tell you the format of this session today that Dr. Navida will be presenting her slides and then at the end she will leave the time for the question answer session. So let's get started. Over to you, Dr. Navida Katpar, please.
Thank you so much. Thank you. Let me share the slides with you, and then I'll start my
Sure.
topic. Can you can you see
Yes.
my
Yes,
screen?
doctor. It's
Okay,
visible.
it's visible. We are here to start with the topic today, that is what is finance, and with its new trends and approaches. Basically, when we talk about the finance, it is the, we can say, the part of a business administration as well as public administration and an individual, we can say, for the individual. It is very much important area, covering the three type of the segments of the population. Now, uh, going through there, what is finance and new trends and approaches, we will generally speak about the finance is defined as the management of funds and related activities like acquiring the fund, investing the fund, and borrowing the fund, lending and budgeting and saving, analyzing and forecasting about the finance. So this is the general way of the definition, covering all the areas, that means three major population that I told you. And specifically when we go, is because the business administration and the of the for the students and teachers and scholars related to business administration, this field will be particularly show that corporate finance or managerial finance means planning, organizing, directing, and controlling the financial activities such as procurement, acquiring, acquisition, and utilization, or we can say investment of the funds of the enterprise to achieve the firm's goal. As I told you, the finance is for individual, finance is for corporate finance, for businesses, and finance is for public and government financing. So we, our particular portion will touch the individual financing as well as corporate finance, because corporate finance will cover the business activities and business for the entrepreneurs, for the entrepreneurship and business person, businessmen. And individual investment will cover whenever the individual personally invests some amount for the purpose of getting profits from the markets, and that will also be there. So going to the other slide, our focus is generally on the business side of the finance and individual. So corporate finance, let me tell you what is the goal of the firm. Generally, we can say that the goal of the firm is and divided into two parts. Like one is the primary goal of the firm, and another is the secondary goal of the firm. The primary goal of the firm, as we all know, is the maximization of the profit, maximization of the wealth of the ownership. Means whenever we say that owner's wealth is maximized, it means the profits are included in that. That's why the secondary goal, or we can say economic goal of the firm, is called as the maximization of the profit. But the primary goal is wealth maximization. Wealth is a broader term as related to the profits, because wealth covering not only profits but also the reputation, the goodwill, and the sustainability and the future and the prosperity and the social responsibility and different other many other things like that, that can cover in the imagination and in the image of a business as a brand or as a name of business. That's why the wealth maximization is a primary goal of a firm. So we are now, we will all everything will be revolving around this goal of the firm, because what firm is any firm of organization, that we will, whatever we will talk and whatever the planning, organizing, directing, controlling, these all activities are revolving through this to fulfill the, to satisfy the goal of the firm. That's why I will emphasize that you must understand whatever I will talk about, the ultimate goal of that will be the activity of goal of activity. There is particular goal of every activity there within inside the goal of the firm, and there are different activities that, like for example, few of them is mentioned here. So the particular goal of every activity will be we will be discussed, and then the ultimately goals are all activities will touch to the goal of the farm generally. So this was the important point to understand. Now we are going there. The corporate finance activities, I was talking about the activities. What are those activities? Major activities. We cannot say these are all activities, but we can say these are some of the important activities that the financing or the finance area will cover. The financial planning and forecasting and budgeting is the preliminary and first step of the finance management, financial management, corporate management, business management, or what we say the managerial finance. This is the important segment of that financial planning. We should do that and forecast and budget for the financing. Now let's go beyond. Whenever we talk about the finance, the accounting is also related to that supportive subject of the finance. We can say they're covering the same type of the things that are we read in the finances and the accounting. So remember, if we are the students and we are the learners of the finance, we must have gone through the accounting, financial accounting and other accounts. So the different financial statements we see there, the financial statements in which the we can say the balance sheet. If I talk about the balance sheet has two sides, means accounting equation. When we say talk about the accounting equation, the brief formula of the balance sheet, the assets equal to liability and owner equity. This is the just a formula for the balance sheet, simplified, and it is also called accounting equation. So the same things I will talk about. Okay, when we are talking about the health and the position of the business of any firm, to see what is the current position of the business of a firm or organization, then we will check the balance sheet, and in which we see there are the assets, and there are types of assets: current assets, long-term assets, and then liabilities, current liabilities, long-term liabilities, and owner equity is the long-term, just as a share and a stock. Let's see, when we talk about the first most liquid assets, current assets, then we write the cash. Then after that, marketable securities, then accounts payables, then inventory, and then so on, the shop supplies, whatever in the current assets, and then we go on for the fixed assets. So this is the portion of the, let's say, working capital is the another word of the current assets. When we say about the gross working capital, that means we are talking about the current assets of the business. And then when we talk take the term of the net working capital, it means we are talking about the current assets minus current liabilities and equal to net working capital. So here, if I have written in a finance sense, the management of cash, management of marketable security, accounts payable, inventory, and all these are management of working capital. It means that we are what doing? We are managing the current assets here, especially, and that are the most important and liquid assets and important areas of the finance to manage, because every activity related to these will ultimately lead towards the wealth maximization of owner and the goal of the firm. Now see here the cash management. I will briefly give you the overview, because the all the subjects, all the topics have different the chapters, and taking more than 1 or 2 hours to speak on any one single point. That's why to tell you the overview, that cash management will tell us about the managing the cash in a way that it should not be the costly, and should maximize the profit, maximize the return, so that the ultimate goal can be achieved of the firm. So cash management, when we talk about the cash, there will be the huge cash. Maybe there is the much amount lying at your business, and it can be the useless if we are not investing that amount, or if we are not going to do something with that amount, that cash. So this cash is called idle cash in a business. The cash management will tell us that how would you invest, yeah, how would you make use of that idle cash from the business, you can invest that, and you can, for example, operate that in a way that you should keep a portion of cash in your firm that should just be workable. Otherwise, all other portion of the cash will be the idle and useless, and it will increase your cost of the business. Rather, you must take decision as a finance manager, or whatever your finance related post is, that is a as an executive, you must see the things. CFO, chief executive officer, you must see whatever at fund treasury manager, you must keep the cash at the level that will be the optimal level, is called optimal level. You can take the fixed cost from that, and you can see the opportunity cost from that, and you, after all these things, you must keep the simple optimal portion of the cash at the business that is workable, usable, operatable, and then other portion you can invest further, and that investments can be into the marketable securities. The marketable securities are the avenues, are the opportunities, or you can say are the securities where you can utilize your idle cash to invest here, and then you earn the profits, and save your idle cash by making the business costly, and then you can make profits in within the timing. Ultimately, you have to see the goal of the firm that should be maximized, the maximization of the wealth of the owner. Now, coming to the other point, account receivables management and inventory, and all these working capital management. Like I gave the example of cash, similarly, account receivable, for that you have to keep such type of the policies that you should not go beyond the goal of the firm. And inventory should also, it should be the manageable, it should not increase the cost of storage, cost of other many other things, that if it is lying uselessly, if you are as a inventories of three kinds, as raw material, work in process, and finished goods, you must keep at optimal level of the inventory, and order that optimal amount of inventory that are very much useful for your sales, for your trade, whatever your or service, whatever your business kind is. Then like that, you have to make strategies for making strategies for working capital management, and then so on. Coming that, the capital budgeting is also the important topic for making the analysis and budgeting for capital investment in the business. And then risk and return is a very important to see how much risk is available and how much return you can earn in the business. It is said that high risk, high return. So this rule is also there, and then we can analyze the portfolio, how to manage that portfolio so that we can minimize our risk and maximize our profits and returns in the business for completion of our goal. And then analyzing financial statements is related to that. As I told you, is accounting, in accounting, and other is a full-fledged subject in finance. We are also learning in this with this title, is analyzing financial statements, in which all the financial statements, balance sheet, income statement, and cash flow statement, owner's equity statements, and others, we have to analyze carefully what is the position of business. And income statement is the profit and loss statement, is also called the same similar name. And the simple formula for the income statement is the profits are revenue minus expenses. That there are just two things very much important, and two component of the income statement: revenue or sales, and expenses. Then we have to come to the, when after deduction, after subtraction, we will see what is the net cash, what is the net profit or net loss. So this will be the simple. And about the cash flows, inflows and outflows related to the cash only, we will see. And these are very much important, as well as we can say wide in an related very much scopic, and we can say very much lengthy topics to discuss. That's why I am just giving you a brief introduction, so that we can move forward, and we have limited time. Break even And leverage analysis, this is also the point of where the business, we are starting a business, let's suppose, and initially the business for 2 or 3 or 4 years will not be able to make the remarkable profits and returns. That's why at that stage, when we say that the business just in the first and second and third year can make losses, after that can come at a par of that, no loss and no profit, and the zero losses and the zero profits. At that stage, we can say the business is at break-even point, and what will be the leverage situation, but we have financing through the debt or through any fixed income security, then we will analyze these things in that area. Then valuation of stock and bonds is also important, that these are the long-term securities, and making the capital structure of the business, making the very much large kind of the discussions, and we can say the stocks and bonds can be, we can say the one right hand side of the balance sheet, as I told you already, the assets is equal to liability and the owner's equity. These two are covering as that type that side of the balance sheet, and also the capital structure of the firms. And that's why bond is the long term security, stock is also long term security, but in the liability there are also the mixing of the short term security that we will see in the other slide. Another topic that is important for the finance, that is the time value of money. Whenever we are planning, analyzing, forecasting, budgeting, whatever the all activities we are performing for the business, we must see the time value of money, because as we learn in the business that time has very much importance, and time is money, as said in a business. So time value of money is that whenever you have money in hand today, has more value, worth, than the money tomorrow. So because you can invest that, and you can utilize that money, and you can earn more profits, and you can money will earn money, a concept will be applied on that. That's why there are many formulas for that, to understand and to analyze about that. So these are the major. Cost of capital is another important thing. That is whatever we talked about the capital structure of the business. Capital means, we can say, financing through the sources, whatever sources. The two major sources are bond and stocks. Liability, and we can say, if I'm talking about the long term, then long term is a bond and stock. If we are adding the short term, then the liability will be short term here. But the cost of the capital, when we are talking about the capital structure of the firm, then there must the analysis of the cost of capital will be must and the important factor. That is what the whatever we are talking about, the bond means is a financing, issuing bond or issuing a stock. Whatever the cost we have to pay on these bonds and these stocks, it will become into the area of the cost of capital. To analyze that, making through many formulas, whatever we are issuing bond, what kind of what up to what level of the interest rates and the cost will be given to the bond holders, and as a stock, what kind of what level of dividends, and how what policies we will see for the dividend will be issued to the stockholders, or we can say shareholders, or owner of the firm. So to estimate about the bond interest rates, about the shares, the dividends, and about the retained earning, and all these, when we talk about this and their issuance, and their we can say financing process, and under the financing process, when we issue these securities, we must talk about the cost of the capital, and we must see and analyze this thing. So it was about the major many other areas are related to the finance, but the major I talked due to the very short time. And so, coming to this slide, which party you are, as I told you, there may be the in the business, in the finance, one party can be the financier, another party can be the provider. That's why we can the lender and borrower, the security issuer and security holder, security purchaser, security seller, these are always the two ways for this thing. So first is the financial manufacturer. What is the financial manufacturer? Means a financial provider, finance provider. Venture capitalist also is a word used for this. We can say the venture capitalist, the fund provider, fund that can be very much famously for the entrepreneurs that are related to the financing of the business. That is venture capitalist institutions, and these are the wealthy type of the personals, group of people that make venture capital and then provide to the entrepreneurs, to our business persons to start their business. Then a surplus unit is the same. Similarly, we can use for those people who provide fund, can be said as surplus units. Investors, they also invest, because even the creditor is investing amount, owner is investing amount, and then the creditor and owner and the security buyer, all these are the we can say coming into the finance manufacturer and the finance providers, a simple thing. And the financial intermediary is, we all know, the banks, the financial institutions, the intermediaries, all they play the role of the when they are in the position where they connect with the surplus unit and the deficit units, and play the role of intermediary. And for the finances, they are coming into the financial intermediary role. And then financial users, they are opposite to that. Financial manufacturers will make manufacture or provide fund for the users. That users can be called as borrower, as deficit unit, as a security issuer, as a seller of the security, and fund needed person, fund needed business, institution, or organization, or a firm, whatever we call that. Then we can see about type of finance. What are the type of finance? The as in the start I told you, the finance is not limited to one segment of the population, or one segment of any, we can say, government, as a state, and the people. And in the people, there is the business, corporate is separate from the individuals. So there are three main types of the finance areas, like personal, corporate, and public. In the our main focus is on the corporate structure and the forms of the business, type of the financing. So corporate structure and forms of the business, as we know, that when the person is starting a business, have the three type of the options to start, in which he is interested, like sole proprietor and partnership and the corporation form of business. Major financing is the talked about partnership and corporate form of business, because sole proprietor is a single owner, and it is kind of a small business, as well as it can be increased, and as it increases, then it can be converted into the partnership, then private corporation, and then public corporation. So it can take time for that. So when we are coming to another slide, that are the role of the financial manager for the financing. As we talked about the financial intermediaries and the financial, we can say, the capital markets, and all these things are working like this. The financial manager is here, and then what happens, at the first we can say the financial markets are this at this point, and the firm's operations are at this point. In the first step, the financial manager will acquire for financial will see the financial markets for acquiring the fund, and then the fund will be provided to financial manager, and financial manager will use that fund for the financial operations. And then after that, the fund will be produced, and that will come in the decision of the financial manager. And then there will be, what happens, there may be the two decisions at the fourth stage. One decision can be the profits that the business has earned can be plow backed, Can be plowback means can be reinvested into the business for the time being as the business has the need, for example. That will what happen there when and if we are flowing back the finances, it means we are saving ourselves from the financial market to avail the other extra needed funds to operate our business. To avoid that external financing, we prefer internal financing because it is cost very much, very nominally cost free financing for the business at that stage. That is for A. And for B is that whenever we are not doing that thing and we feel that the business is not in the position that can earn sufficient profits, then we will again need the fund. But here we are talking about the profits. When we have the business has earned the profits, we can plow back, and in another way we can invest it into the financial markets again as purchasing and the financial securities, as I talked about the financial markets, in the financial market marketable securities, and even the we can purchase the, as a business, purchase bond and shares of other investments, and we can also make the other plans for our business health. So we are doing that. After this slide, we are going to understand the corporate finance and as a whole. As I told you about the structure of means the as a finance, as a sourcing. We talked about the asset and liability and owner equity. Liability and owner equity are actually called the sources of the finance. The right hand side of the balance sheet is called sources of the finance, and the sources of finance, from where the finance comes, I already talked about that, but this is in the graphical presentation, that sources of finance are divided into two: equity and debt, and these are the major sources. And then equity is are further divided into common stock and preferred stock, and the debt is divided into long-term debt, means called bonds, different kind of bonds, and the short-term debt is a from different short-term security. That can be money market security. It can, we can say money market security. Here we can say capital market security. This is also the capital market security. Equity cannot be the money market security, but debt can be the money market security. When we talk about the maturity of the debt is less than 1 year, up to 1 year, that it will be the money market security, and that will be the short-term security. Those short-term debt are many. There are many examples of that. We can again see the slides, promissory notes, and then commercial paper and etc. And here these two things, as I told you, these two elements of the sources of finance is the debt and equity. When they are mixing into the firm, they can make the capital structure. There is also another term that is called financial structure, and financial structure is little bit different than the capital structure. Capital structure is covering the long-term securities of the financing of the firm, like equity and debt of bond, debt of the long-term type of portion. This one portion, debt, as my cursor, you can see that the debt of this long-term portion, when is acquired, and the equity from these two portion, when they come together, it make the capital structure of the firm. But when we talk about the financial structure of the firm, it means we are covering also this portion of the short-term financing, debt financing also. Now, seeing this, the capital structure is also in the finance, have the in the research point of view, and other every topic, every area of the finance has the created the topics for the research, because in the theoretical forms there are many theories. They are important, and related to the capital structure theories are also important, and they are very much famous for this area, like capital, like pecking order theory, trade-off theory, and agency theory. These are related to the capital structure theory. And what are these? This is another detailed discussion. That's why we are moving forward, and then we will discuss and we'll see what is the investment choice and choices for the financier, as we talk about the individual as well as the corporate. So there can be the local investment choice and the global investment choice. For the local and global, we can see the some important securities, same is the we discuss the bond investing, equity instruments, mutual funds, and the special equity instruments, derivatives, warrants, and options. These are the derivatives, also the kinds of the equity and debt, and then futures and forwards contracts. Then which we also contract for the commodities, and then investment companies, fixed income investments, and all different bonds and preferred stocks are called the fixed income investment. Whenever the term fixed income investment comes, it means we are not talking about only bonds or only interest related security, because interest related security is due as a fixed income, as well as preferred stock is a fixed dividend payer security. That's why we talk about the fixed income investments. Means we are talking about two type of the securities, that is the bond, that are the bond and preferred stock. Then the real estate is also an avenue for investing and earning the finances. And these are some scattered topics that we are looking at the finance area. Then types of the debt securities, in which I told you that this is the detailed slide. I will just take the name, as we know what are the time is very much required for explaining these. Means long-term corporate bonds and short-term corporate bonds. Here, I need to tell you that again. I will say that domestic local bonds as well as international or global bonds are issued for financing according to the need of the corporation, or whatever the person, individual person, want to invest globally or locally. So the different kinds of the bonds are here. For example, few of them, many other bonds and names are available in the market in the world, in is a global financing. Whereas, for example, we are just touching few of them, is the euro bonds. Euro bonds are the bonds that are internationally sold and purchased, and then these are the outside of the issuing country's currency. So these another is the maple bonds. Maple bond is the Canadian currency bond, and is also sold internationally and globally. And then is that is the samurai bond, that is Japanese, and denominated in the yen. And then panda bond is the panda is these sometimes you can notice that the bonds are given the names are related to the any famous, any renowned thing or person or animal, or whatever you can say, that is the famous in that country. We can say that China, panda is more or less associated with the China. That's why with the name we can understand this bond is related to the China, and yuan is the currency for that panda band. And then kangaroo, as I told you, is a famous animal, kangaroo band. And to see and to read this term, we can understand this is the Australian. And then dim sum band is the China, and this is the name of the cuisine. And then masala band, masala is the Indian Asian like type of name, is the Indian bond. And then European bonds, and the outside of Japan is traded and issued, and means Solent bond. And then euro dollar bond outside the US. Then Yankee bonds, also American bonds. These are some type of the long-term debt and securities, and these are some names of the bonds globally purchased and sold. Then we are talking about the short-term debt. Short-term debt is the securities that have the maturity date of 1 year only, or less than 1 year. And these are the money market security, these are the capital market securities. Promissory note is the example, the commercial paper is the example. And the negotiable certificate of deposit, the banks are also issuing these certificates and securities. And then repurchase repos, these are the securities when first the seller is selling, this holder of security is selling to other person, and the buyer is holding that security for temporary time. And then again after that time the seller will repurchase that security on the basis of the discount rate, on the basis of the interest earning. These are the That's why these securities are called as repos and repurchase agreement. Then bankers acceptance for the international trade, for the acceptance of the amounts, delivery of the goods and shipment. This is very much important security for the bankers acceptance. On the bankers acceptance, the trade is the delivery is accepted for the supposition of the cash is given to certain such and such specified time. And then certificates of deposit, the similar type of the money market security, treasury bond, bills, government short-term securities, mutual funds. Mutual funds are of two types. One of the money market mutual funds, and other are the capital market mutual funds. In capital market mutual funds, we will talk about the bonds, and the money market mutual fund and the short-term security like mutual funds. Then we are talking about the domestic and international global equity investments. And because we are talking about the financing is a very much scopic and wide field, so that we can understand it from it cannot be limited from one within one borders of the country, but it can cross the international borders. Then that's why we have to understand and see what is the importance points, topics, and segments that we are talking about internationally, globally. Domestic equity funds, because we are ultimately listening to those on every venue. If we are related to the finance. So domestic equity funds, they are only related to one country. Means, for example, in the stock exchanges of Pakistan, in the stocks of Pakistan, organized or unorganized, we will talk later. Then for example, Germany, for example, US stocks, and any other country, China, whatever, but one country. That is domestic and local fund financing, investing and purchasing and selling. Then in international equity funds, the equity funds that are sold and bought internationally, it means that these are apart from the local domestic country, other countries in other countries can be sold and bought, but not in the domestic. That is the own stock shares of companies from other countries, excluding domestic stocks. And what is, when we include the domestic also with the international, that will be the global. So global equity funds will tell us that has that has the latitude and the freedom to buy shares of companies from any country, including the domestic stocks, that all the other internationals as well as this local. It can be it is that we can say that the global equity funds can be is the mix, is the combination of the international and domestic equity funds. So the reasons of availability in the financial sector of these securities is, we can say, globalization and the technology advancement, the competition and the integration of the local and global financial markets. And the financial markets are spread all over the world. That's why, because of these things, we can see the securities domestically, locally, as well as globally and internationally. Then this slide tells about the, particularly we are going the equities. Now we are going to the equities, and we just saw the types of the bonds there. Long-term bond, the names of bonds we saw. Now we are going through the in the details of the stocks and equity type of side of the topic. Then when we are talking about the equities, and equities are local, international, global, then we also have something important to discuss, is that there are the capital markets, financial markets. Financial markets means capital markets, and then the stock exchanges, organized stock exchanges and unorganized stock exchanges. Then in that we are also famous with, we are also very known to the name of the indexing, indices, as well as the stock exchange is very much related to the index, and index is shown in the stock exchanges. That's why we are now coming to that points, that the market indexes are indices are the barometers, are the check for the market behavior, performance of the market, performance of the companies. It gives a general idea about whether most of the stocks has gone up or down, they are rising or falling. Then the primary objective of the index, what is that? Index is a something checking point, the barometer as the measurement. The index is to have a benchmark by which the stock price performance can be compared to over a period. What was in that such and such time, and what will be at that, and what has been the trend of that index. That's why is in the Pakistan we have our Pakistan Stock Exchange and 100 index, then 30 index, and then index or indices can be of the different number. What that number shows, the number of the companies, and it can be different numbers, including the group of the companies that are listed at the stock exchange market. So here we are, again we are reading about the stock index. It is the designed to provide investors with a sense of how the market is performing. This is the performing performance, we can say defining or expressing or performing tracking tool index. Thus it is like other indicators that track various sectors of the economic activities, such as the gross. For example, as we know about the gross national product, consumer price index, inflation, and all other indices indexes. Similarly, the stock index is telling us about the performance of the companies. Either they have growth in their prices or the fall in their prices. That's why, as we talk about the other economic indexes, the stock indexes, like them, same measuring the stock performance. Difference between a stock index and a stock exchange in a very simple way is that stock index is an index in a is a is index. An index is a basket of stocks that are bought and sold as a group of the companies. And whereas the stock exchange is a place where these indices or index can be shown and can be dealt with. Means stock exchanges is a place where all the securities are listed. Securities traded on a stock exchange include stock issued by listed companies, unit trust, derivatives, pooled investment products, and bonds. All these sell and buy market. We can say stock exchange is what a sell and buy market. Is a market for the securities. It's a secondary market as well as can be primary market. It is the financial market. It is a capital market. All the names we can give. Organized stock exchanges, also the unorganized stock exchanges. There's also difference in that. I will tell you in the later slides. And then we are talking about the world's top stock exchanges. Few of them is means many stock exchanges are there, but as a few famous are the New York Stock Exchange in the United States. Nasdaq is the National Association of Security Dealers Association, automated quotations. National Association of Security Dealers of automated quotations. This is the unorganized type of the stock exchanges that I told about. This is the automated and worldwide very much famous, and have the place of the second top most worldwide stock exchange at the United States, and then spread so all over the world. Nasdaq is the automated stock exchange, and can be said as the unorganized, because having no building and no place, such as in the New York Stock Exchange. Nice is having a particular building, and those stock exchanges having a building and having a proper setup is called organized stock exchange. Then Tokyo Stock Exchange in Japan, and Shanghai Stock Exchange. They are topmost stock exchanges of the world. China and Hong Kong Stock Exchange is Hong Kong, and Euronext and the Eurozone, and then London Stock Exchange in United Kingdom, and also Financial Times Stock Exchange is also of UK, and then Shenzhen Stock Exchange related to the China. These are some those financial markets where the equity and bond securities are sold and bought, and for all over the world, globally, investors, individual investors, and the corporate finance, and whatever the person can, even from the government, can sell and buy the securities just for their profits and returns. Then global equity. Global equity in particular incorporates shares of companies based anywhere in the world. The global fund can include either single or multiple asset classes. When we talk about the single asset class, it means we can say about there can be the mutual fund, there can be the exchange traded fund, ETFs, the very much growing trend of ETFs, exchange traded fund. These are the group of the funds that are like indexed, and then they are shown and sold and bought in the stock exchanges, and are another portfolio, any portfolio that is the mixing of the financing, mixing of the securities. Then we bunch of the group of the securities that are we are talking about, can be any can be here, and this can be the, we can say that the asset class. And when we talk about the purely asset classes, then generally they refer to the broad categories such as the equities, then the fixed incomes, and then commodities. They also same when more than one company stocks, more than one, we are making the portfolio in that, and commodities that we are selling, and the equities, mixing of the equities, preferred stock, and common stocks, as well as company the security of company A, company B, company C, like that. Further, talking about the ETFs, they are exchange traded funds. They are very much important, growing trend. We can say new trend and new approaches. We can say, since whenever the technology has grown in the financial sector, this is the very much important investing avenue. That an ETF is a type of investment fund that owns assets like stocks, commodities, bonds, everything in the mixing and the futures, but derivative markets, but derivative securities, sorry, but has its ownership divided into shares that trade on stock exchanges. So that these are the ETFs in the bunch of in the company of the group of the shares, bonds, and all that. This as index, they are sold and bought. Investors can buy and sell ETFs whatever, whenever they want during trading hours. And they are allowed to sell and buy during trading timing of the stock exchanges. That's why. But mutual fund in against is in conversely, they are not allowed all the intra period time of all the during intraday. They cannot be traded, but they can be traded at the end of the time in the one particular time. So there are the types of the ETFs, and then we will see the difference. What is the difference of ETF and the mutual funds? But let me say that what are the types of ETFs? And this topic is important. That's why we are highlighting this. Bond ETFs, there is the when we are talking about the bonds, then bond ETFs, they are called bond ETFs, might include government bonds, corporate bonds, and state and local bonds, or municipal bond, federal bonds. They make a mix of the bonds, like that. Then industry ETF, industry ETF is the take particular industries such as the technology industry, banking industry, or the oil and gas industry. Just we are we can take a single industry. When we are taking the name of industry, it means a particular single industry. We cannot mix up it with the textile industry, with the steel mill, and with cement, and the beverages, food industry. They are separate. That's why industry ETF have, we can say, a track of the industry, a particular industry of any of them, and that will be the industry ETF. And then commodity ETF invest in commodities including crude oils and gold and commodities, the platinum, and all other costly commodities and minerals. That is the commodity ETFs. And then currency ETFs, that they are obviously related to the exchange currency of different countries. It is related to the exchange rates, and exchange traded funds that track the relative value of the currency, or a basket of a currency of the different countries, having a bunch of the when the we can say group of the currency and the ETFs. Then domestic affairs, this is also categorized as the domestic ETFs. The individual of a domestic ETF must include at least 13. There is the rule of that, the 13 different securities when we will include, and then it will be made as a domestic ETF. The most, and the other rule is that the most heavily weighted security in the index may not exceed 30% of the fund's total portfolio. 30%, the most heavy can be the third, not more or beyond the 30%. A, B, C, D securities are there, and the A is, if you are including more portion of the A security, then it should not be beyond the 30%, under the 30%, up to the 30%, and then mixing of other securities. Another point is the value of, to make the domestic ETFs, the value of the five most heavily weighted securities. If we get together the five securities, then may not exceed 65% of the total portfolio. It means the whatever the 8 or 10 securities are included in one domestic ETF, and if you are including much more, or you are liking to include the A, B, C, D, five securities in your interest, but they combinedly should not be the greater than 65% of the ratio of the total of the portfolio, because other then after 65, that the 35 should be from the other remaining portfolio, what is included in the total portfolio, the securities. So this should be the rule, and then it will make the kind of the domestic ETFs. And then another point is that, last point is that 90% of the fund stock holding must have a total trading volume of at least 250,000 shares, and a minimum value of $75 million should be there, so that we can call it as a domestic ETF. And then fixed income ETFs, as we talked before this slide, that fixed income securities, fixed income investments are those which have the fixed earning, or fixed income, or fixed charged, uh, fixed charged, we can say, charging securities. So that can be bonds and preferred stock. Because time is very short, I'm going fast. A specialty fund is what? A specialty fund can be the ETF and mutual fund. And whatever the specialty fund is, that we are talking about the companies, or we can say that those are the companies from energy sector, from the gas sector, from the food sector, whatever the special type of the security of the ETF is that. Then global equity ETFs related to similarly, we can see that. Because time is short, I am moving forward. Making money by investing, the ETFs is what? It is from the interest from the bonds, and the dividends from the shares, as well as the capital gain from the shares. And then mutual funds, is the mutual fund is what we can say is a type of securities having the government securities, shares, debt securities, corporate bonds, and then money market securities, as we discussed, as a short term. And these are also financial securities instruments, and avenues of the investment fund, mutual funds. Then there may be that there are the I have told here the mutual fund and ETFs difference between two. I told in the earlier, in this very much that. Then the unit investment trust, they are also similar type of portfolios, but with a little difference. And then there the difference in the mutual and fund and the investment trust, with a little differences. But these are the type of the we can say investments that we are talking about for the financial markets securities. And tracking global markets, in which the Morgan Stanley Corporation International is a very much leading corporation that are working for the indices, and then regions for the financing and global investment and local investment. They have the different kind of the segments, and we can say the different kind of the portfolio analysis making tools that indices are very much famous for. That is a break, and the different Brazilian, Russian, Indian, and China, making us making a region And this is what we can say, that Morgan Stanley Capital International is a big name um, uh, for the choosing investment, what we say, avenue, and security selling and buying. This is the detailed, all about the details of the MSCI, but I am, because of the time, I am going fast. That is the Brazil, Russian, India, and China. BRIC is segment. They are offering the securities through financial markets to all over the world. And then the this is another branch of the MSCI, All Country World Index. It is called All Country World Index, that can spread over different markets of the world, and covering the another is the emerging market index, that is also the covering the emerging market, because there are, we know that one is the emerging market, and another is developed market. Developed is, we know about the all European, US, and all these markets. And then we are talking about emerging, that are all the Asia and China and Korea and Malaysia and Mexico, and all these are related countries here. And then another is Europe and Australia and Far East, all these covering this MSCI index stocks. And all these securities are shown here, sold and bought, and developed markets and emerging markets. Developed and emerging markets, I told you about that. And then asset management companies are working, and these are very much famous in worldwide financing, that are BlackRock Incorporation, iShares Incorporations, that are tremendously working, and that the trillions of the investments of the amounts are worldwide covering in these things. These are the related, that organized and unorganized exchanges. As I told about this, these are Nasdaq, Nice, Dow, and the Dow Jones Industrials. Apart from that, the Sensex Indian, that is Indian exchange, stock exchange, and Bombay Stock Exchange, and Nikki, and many other that we are very much famous are these stock exchanges. Then market capitalization is another concept. Why? Because when we are talking about the investment, then there is the market capitalization of the securities, and that is what market capitalization is: the outstanding number of shares that are in from any company, corporation, outstanding shares multiplied by the current market share, that make the market capitalization. And say, suppose in a very language, we can say that a company has 2 lakh outstanding shares, and the stock price is 40 per share, then the market capitalization of the company will be 2 lakh multiplied by 40 will be 80 lakhs. So this is the market capitalization difference in free. Then there is that these stock exchanges are working on the basis of the market cap. Market cap are divided into two. There's the full market capitalization, and then float market capitalization. Float market capitalization is something that is freely, the shares are freely floating, freely sold and bought in the market. On that basis, the capitalization means their price and their outstanding number of the shares can multiplied, and the market capitalization can be acquired. But in the full market capitalization, what happens whenever we are talking about all the shareholders, even in that the promoters, founders, and the permanent owners of the shares are also included here, and we calculate the price of the shares with all the total shareholding parties, and then that will be the when we multiply the capital, market capitalization will come. Now, what is the difference here? The major thing is to understand is here is the floating market capitalization is what where we are deducting the when we are deducting the shares of promoters, founders, or we can say permanent shareholders, that their shares, it is logically, we can say that because the shares of the permanent shareholders are not coming into the market for selling and buying. If they come in the selling and buy, then the ownership will be lost. That's why we can say that the permanent shareholders are not in the floating market capitalization, but they are in the full market capitalization. And all stock exchanges have the different their rule. They have their policies, their preferences. They can calculate their capital market capitalization on the full float basis, or on the float on the full market capitalization, or on the free float market capitalization basis. This is on their choice. And then large, mid, and small market capitalization in between, in less than 75. For example, assumption we can say 75,000, and it is the rule. Capitalization, if there is greater than this, is a large cap. Mid cap is between 13,000 and 75,000, and small cap is less than 13,000 investment. And then we can say this is the category of the large, mid, and small cap is called in the financial markets. Then investment in the real estate, and real estate, through what we say, that real estate is a property oriented. And then the avenue of the investment is the low liquidity investments. Low liquidity investments means such type of the securities which are not readily available in the market. It's like bond, share, like short term and long term security, but rather they are these some commodity related investments, like diamonds, like gold, like silver, like copper, like you can say art means what we unique stamps, and the antique things, whatever we can say, seals, and these type of the things are related to these coins and stamps in the low liquid, because it is not liquid means that is very much readily active and sold and bought and converted into cash. Illiquid means this is low liquid, or we can say less liquid means that are not very easily converted into cash, are very easily sold and buy in the market, because these type of the things have very much high prices, and our richest parties can come into the market. This is not a routine work of the market. That's why we can say it is the not the very much liquid investment. It is low liquidity investment, and then can do those parties that can avail this and suit them. Though, so the risk factors also in this all the game, there is also the risk factors before the making any investment. We must consider those risks are risks are of the different types. For example, currency risk, inflation risk, interest risk, liquidity and market risk, and business and management risk. And these are again and another much detailed discussion. That's why, but we have very much limited session. That's why I am skipping that again. New trends and approaches in this segment, this type, we are coming ultimately to the new era of the finance that has recently emerged, say, suppose from a decade like 2008, 2010, the emergence of the technology that is fully taking the trends of the traditional and conventional finances towards the digitalization of the finance, toward the online systems, towards the totally mobile and computerized system, that is due to the technology trend of physical assets. And what will happen in the future, even we can say that this trend of the physical assets that we are selling, buying, would get converted into the financial assets, and the real estate will be also sold and bought by the assets that will be the securities representation. And then infrastructure assets will also be will also take the place of this type of the technological touch. And then we can online do these things. Then precious metals and ETFs that we talked about in commodities, copper, nickel, aluminum, and then the related ETFs also are booming, and they will increase the market internationally, globally, because of the technology. And that's why we can say the global investment will increase, and global equity investment are also related to ETF that we discussed, and global bonds and currency investments, and foreign currencies, also mutual funds that we discussed, and a unit trust, and all these related portfolio management services will be very much far will be expedite due to the technology and coming new trends and approaches. Fund management will change their tracks, and then relationship management will increase. Corporate social responsibility will also increase because of these new trends, and it should be into the focus of the finance area also. new trends and approaches in finance, also tells us about the trends of the cryptocurrency that is also increasing day by day, and very much that was not famous in earlier timing, and then in one recent years it has emerged very much widely, because this is the kind of cryptocurrency is a kind of a currency that is imaginary, that is created by through coins, and then is not physically transactions of the cash deliveries in this cryptocurrency, is totally through the digitalized currency it is called, and we can say it is the totally through the different type of the coins of that. It's the ruling coin of it is the Bitcoin, and then much more about this is that centralized and this is decentralized system of the currency investment. Then it is another and approaches in the finances that has taking place and overlapping, and then in the future we will see the world is will be different from the financing aspect. Lending, retail lending would be the electronically growing in the future, and then credit evolution would be done by that process without papers, without any physical appearance. That will be electronic, and the GST, general tax sales account, sales tax accounts, and the income tax accounts, and all other accounts will be electronically checked, and then finances will be there like that, and the quick credit appraisals, and then the agile risk management will be spur and speed up with this lending and crediting system. Retail lending will become highly technologically driven, and the commutative, and everything will be digitalized in online systems. It will be shift the thinking of the financing from physical to this is the mixed mode we are seeing, and then now is the major portion is the physical, and the smaller portion is the digital. But the time as the time grows, it will be coming like this and overlapping, and then the time will come that the figure will be the inverse. Now we are saying that electronic distribution of the bids and the request of the proposals, these will come into electronically, and agency websites, the third party suppliers receipt of the electronic offers, bids, proposals, CD submissions, and all these the topics of the electron finance. That will be electronic supplies registration. There will be the third party web based systems, then computerized contract management softwares, cost control reporting tools and systems, and accountings, and all these rewards auctions, and how low can you go is not the possible in the future. We can go the fast online dispositions of the surplus property, use of the social media and Facebook, Twitter, LinkedIn, and whatever the enterprises resources plan. So these are the different avenues that online we can avail as a financiers and financial investment. Again, this is the briefly I will tell you about the corporate finance. The social responsibility should be taken in a account when we are going through that, and the pollution and the many other things that what we say, the corruption and the hacking and the different other mishaps will be decreased like in the future. That's why that was all about uh, my the session, and this is the final note. Now questions and answers, then I took much time. Thank you so much, Dr. Heather Shah. It's up to you. Over to you, please.
Yeah. Thank you very much, Dr. Navita. It was so wonderful presentation, and I could see your slides were so rich, and it covered each and everything, the proper concepts of finance, and I was enjoying your presentation just like I was going through all the finance related topics and everything in at glance, which the people learn after the 4 years. You have told us all these things in that yes, indeed, our audience, they have learned a lot from your session, and it was so powerful. I liked your energy, which was so wonderful. I could not see a bit of lower your energy while explaining the different things. You were going in so wonderful flow, and I was really enjoying the slide, which was so rich. At the end, I would say that the slides which contained the new trends and approaches were so heavy loaded that most of the question you addressed on that, because the students and the particularly the different researchers, they asked about the new trends and approaches which you have included in your slides. That was a wonderful thing. And the end of the slide was also very nice. That was regarding the corporate social responsibility, which was again very intelligent thing you have included. So I could say that you have just tried to include all the things. It was just like the ocean you have put in the drop, because you have touched each and everything of the finance in that thing. And that was the aim of this session, that anyone, the people particularly who are interested towards the finance, what are the basic things, what are the basic concepts, what are the financial markets around the world, which you have included, the different Nasdaq, etc. you have mentioned in your presentation, was fabulous. Thank you very much. Wonderful presentation. It was so wonderful content. It was. We have few questions for you, Dr. Navida. If you allow me, I would start taking these questions.
Yeah, yeah. You thank you so much, Dr. Heather Shah. You have you praised a lot. I think I'm not such deserving uh, of that huge applause and like great words from you. Okay, I'm ready if you are asking some questions.
Yes, please.
Were
So
you
the
were
first
you
question I
hearing
would
me?
like to ask.
Mm.
Sorry, please.
So I talked about the. Were you hearing me? there,
Yes, yes, yes.
there was
We
interruption of net.
definitely hear
Okay,
you. It's very
okay, okay.
clear. Voice is very
Mm,
much clear. Okay.
mm.
The
So
first thing
please,
the
please.
audience wants to ask you that what's your opinion, the fintech or the traditional bank? What you prefer?
Mm. If there is a question of the preference, it is not limited to me because it is the need of the time and the need of the hour, need of the world. That the world is going fast and fast, and we can see this is the era of the innovation. And as we say that traditionally, I'm giving you one example. Fintech is the financial technology, and traditional or conventional, what you are saying, the conventional finance or the finance of the technological finance, just like that. Fintech means financial technology. Now what happens, I am giving you example. Once before entrepreneurship, there were the traditional and conventional business in the world we are seeing today up to that. But everything, everywhere, the innovation process is not ceased, not stopped. It is continue, and will continue always. If you can compare it like that, traditional and conventional business and an entrepreneurship. There is the when we talk about the traditional and physical and the conventional way of the financing, it is like the financial or traditional and conventional business. And what if we will tell about the entrepreneurship? There is the innovation, risk taking, and there is risk taking, innovation, something new, something unique to establish in the market, and that will be the entrepreneurship. So the fintech is like the entrepreneurship, like the innovation, like the technological change and the world, and the digitalization and computerization and mobilization, mobile of the things. Now, now your answer, if I ask, what will you prefer? We will prefer whatever the world is going for. Whole the world is going for the online digitalization, technological adoption. We have to adopt this technology. I will must say that traditional system we cannot totally wipe it out because there is very much a huge stake is ours of the people are as in employment is there, as well as we can say the all the financial all the economic major economic indicators are related to that. The employment and the education system, previously whatever we have the crew, we have the very much huge amount of the people population of the employment and working in the physical system. We cannot replace them all of a sudden. But my view is that we have to adopt all the technological and all the digitalization and fintech into that system, like as I gave you the example of the innovation in entrepreneurship and traditional business. whenever the traditional business want and like to introduce innovation in their own business, traditional business, the concept is entrepreneurship. That entrepreneurship means in the traditional business you are welcoming the concept of entrepreneurship. It is entrepreneurship, the mid of the mixing of the two. So I in my opinion, I will prefer mixing of two. This condition is this situation, and after that in the future I will prefer that we should shift ourselves, and we should go with the world that is internationally, globally, the fast world going to the development. We should also adopt fintech. This is my answer.
Yes, yeah, very rightly said, very well said, Dr. Saigo. This is what actually the world trend is. We have to move with them, and we have to go along with
Yes,
that, with the advancement
yes.
of technology. Dr. Navida, we have one question from our colleague. He's a PhD doctor as well. He wants to ask the question that why young people avoid to opt for the finance as a career as compared to other specialization like HRM, marketing, etc. What is the secret behind it? Is it very difficult because most of the time student come with us and they just ask one question, that is it so difficult to take the finance or accounting because there is a lot of calculation involved in it and there are so difficult concepts? Is it true or is it just myth? Yes, please.
Now what happens, this is the reality. Being Pakistani, I will give you the answer. It is being
Yes, please.
Pakistani, because this is difficulty of our people, is because everyone knows that the system of education in our country is not similar, is not at par, is not standardized, is not one, is not unitary, is not a monotony. There is the very much, you can say, the flaws, very much flawed system. Means in our times, I can say, in the the world is seeing that the education system has remained very much flawed. That's why the it is not, I cannot say the fault of in one party, of students, of teachers, of this is overall system. And this overall system is making all ingredients are together there. So the weak, whenever you have the weak educational system, your student will grow like that. And at the stage of the university, when they come, their previous education is not so strong in the sense of mathematical, we can say, in the sense of calculations, in the sense of, we can say, technical understanding, so that they are very much fearful, afraid of that, afraid of taking the finance, because the finance will be that kind of subject that require, no doubt, that require calculations and numerics, and that required, you can say, the logical thinking. And that's why they are afraid from, if you are not good at the mathematically and at up to the matriculation, then you can feel difficulty in that. At least you should be good at the mathematics up to metric, at up to first year and second year of the college side. Then the finance is not difficult for you. So many people are taking, because when they feel themselves fit in the mathematics, they come there. But finance
Yeah.
is not total mathematics, but finance has the portion of mathematics and these technical formulas, and then calculations, and then many other, I think, higher grade of the first year and second year college type of the, what we say, calculus type of the things. So it is, that's why they are feeling difficulty. And the other subjects, HR, marketing, and what we say, management, they are theoretical type. So they feel free and easy, and very much they feel very much we can say, their alignment with that subject can be built in the future. So that's why they take those subjects.
Very nicely said once again, Dr. Navida. It's a really, that is the different things which matters a lot. We have received one another question which is very interesting, and please share your opinion on that. The comment is that as an expert, please elaborate us that if we take the higher education, the PhD in finance, will it help us in the banking sector as well? Yes, your comment on that, please.
Yes, banking sector is very much is popular in the research for the researchers. They are, and a lot of the work and literature is available on the banking sector, and you can add your idea and new creativity in a gap of the research. You can fill with that gap by taking the topics from the banking side, and a lot of the I can say room is required, is available for you people, because the time is now shifting toward the online. So online digitalization and you say fintech, you can utilize this thing as a finance, as a, we can say, research gap, and you can take this is very good for you people to take the research as a research topic. I will suggest that very good.
Yeah, very nicely said once again, Dr. Navida. The last question, since we have taken a lot of your time, the question is related to the role of artificial intelligence in the finance. So they are asking that should we adopt the traditional topics of finance for our masters and PhD, or should we go for the fintech related topics, which are hot topics, considered to be hot topics? Your opinion on that, please.
Yes, yes, my dear students, if you have this type of question you are asking, I will suggest you that traditionally we have lot of literature on the tradition, on the conventions, on the conventional theories, and then empirical theoretical research is a major thing, and then empirical research. We have lot of work and literature available there. But if you want to do something new like innovation, you must go through the digitalization. Fintech is a very good topic for you people. You are the, and one thing more, I will tell you that you are at this stage. If you are now going to do your bachelor and masters, you are the different generation than others that we had seen, and as we had at that time of your BBA and MBA, because digitalization and fintech is in a decade. When 2008, there was a person in he introduced the type of the cryptocurrency type of the digitalization system, and then after that, for example, I tell one decade is have passed, that the now fintech is growing fast. So why don't you, so you should take these type of topics so that you can fill the gap in our society or in our country. There is the opportunity, because saturated societies have no place and no room for grow. We have always every type of the research we need it, because we are such type of society which is not saturated. Even we have opportunity, we have to grow in many type of areas and aspects, especially digitalization, especially computerization, especially automation, and whatever you told about that artificial intelligence.
Yes, very nicely said once again, Dr. Navida. I enjoyed a lot, and our viewers they enjoyed a lot.
Thank
We
you.
could see a lot of comment, a lot of things they have mentioned. Very
Thank you
nicely
so much.
said. Thank you very much for your precious time and your suggestion. And I love the content which you shared today. It was so wonderful and it was so rich in terms of it included each and everything one should know regarding the finance while they are opting for finance, and they want to see whether they will be a fit person for that finance related subject or not. Once again, thank you so much. What is your message to the world as a teacher, researcher, trainer, learner, professional, and educator? Yes, please.
Thank you so much, Dr. Haider, to give me this opportunity to talk about as a message also. Is that as a teacher, I want to say that kindly, um, as a teacher, I would say that to the student, that please carry on yourself and pull yourself up towards the trends of the world that are, as we are discussing today. It is the need of the hour that we should we should be at par of the growing world. And always our name of our country is coming to the emerging, the developing, the poor, because of all financial and economical indicators that are very much lagging behind, and we are not up to mark. So we should think as a innovator. We should think in every field. We should think about our economy, our finances, so to grow in a way that we can reach at to standardized where the world is going, and they are going fast. The investment is not very much satisfactory in our country. The financing is not good here. The green the what we say that green economy is not good at our end. So that's why my message to you is that you must be the generation as you are, because you are the generation of the digitalization. The mobile and the computer is a very big change, technological change, where all these now all the transactions, as we are talking about fintech, all these are through the mobile, through the computer, through the easy pesa, through the easy investment. Everything is available, so you must learn these skills for growing for the better future. And for to the teacher, I want to say that we teacher, as a teacher, it is our responsibility to sort the new coming and the future, all the innovative kind of the learnings and the new trends and new approaches, adopt and then learn. We should not think ourselves as a teacher and that is the end. We should think ourselves as a student, and learning never ends. And for to me, for the whole life, learning is always, and many things are, because this is growing world, technological world, so many things are rushing toward us to learn about the new coming technological goods. That's why I think that we as a teacher, at whatever field our is, we should be innovative, we should be creative, we should be cooperative for the students. We should give them room to be, not to be fearful, but to be friendly, to be friendly and learn in the friendly environment, and then ask the question whatever they have confusions. We should not be rigid at that level, but we should keep our limits as a teacher, but with the love and with the cooperation, with their innovative ideas, you can teach your students.
Thank you very much, Dr. Naveeda Katpar. It was so wonderful message you have given to the world. This is what we want, the people like you who are asset and who are contributing to the world at large. They should give the impactful message to the people so that they could work and they could have a contribution towards back to the society. Thank you very much once again. Indeed, finance is a wonderful subject. I always like the finance, even though I did my PhD in HRM, but still I like the people and hang around with the people who are the experts of the finance, and they share a lot of good stuff like the Dr. Navita has already shared. Indeed, a wonderful explanation and a powerful content she has already shared with you and elaborated in a wonderful way. I hope you will learn and develop your understanding regarding that. Take advantage of all the information and important tips and suggestions shared by the expert. At the end, what I would say is that is all we have time for today. Thank you once again, Dr. Navida Katpar, for your wonderful presentation and wonderful suggestions and the content. I would also like to thank our audience who joined us. If you have any additional question related to the information shared today, you can email us or you can directly connect to the speaker through her social media and email address. We will also provide you her credential. You can contact and you can collaborate with her on different research project or research paper, etc. So thank you all for your support
Thank you.
and liking our sessions. Yes, please, you want to say something?
No, no, no. I was listening to you. Please carry
Okay,
on.
please. Yeah, so stay tuned as many sessions are on the way. Please do not miss any session. So till next session, take care of yourself. Goodbye. Bye bye.